The following video is intended for educational and documentational purposes only. All the information in this video has been sourced and/or cited. None of the information, trades, or stocks mentioned in this video are recommendations to trade. Option trading is extremely risky. Please consult a financial advisor before trading, and trades made from this video may result in financial losses. So do not trade anything shown in this video. Thank you. What's going on out there, my fellow slumdog traders? It's your boy here once again, bringing you another video. This time we are going to be discussing how to play earnings. As you may know, earnings season is literally right around the corner, starting approximately in July. Actually, today, I want to say some companies are reporting, some banks are reporting as well. But before we get into that, make sure you hit the subscribe button down below. Give us a thumbs up if you like what you see. And also don't forget, make sure that you leave a comment down below. Let us know what's going on with you. Let us know what you're looking at, what plays you're looking at, how you feel about the video, whatever. But drop it down below. All right, with that, let's us get to it. So the first company that I have up for earnings, because I'm actually playing quite a few, as you see. I'm playing Tesla, Twilio, PayPal, Apple, Activision, Disney, Square, Chewy, and I might play solo again, 50-50. I don't know yet. But starting off with Tesla, they report on the 22nd. And if you've been sleeping under a rock, you need to get the hell up out of there, because Tesla has been going crazy. I have another video out that I'm going to actually have another video in the works. I'm going to show you how I turned $1,100 into damn near 20 grand. This is actually one of the plays that's a part of that. And this is what I'm actually holding for earnings. I got one that's completely ridiculously far out the money. That's another $1,000 move. But from the way things have been talking, from the way things have been going with Tesla, I have a strong feeling that it's going to hit that, if not get damn near close to that, before August 21st. And there's the other catalysts that are going to be involved with that coming in September as well, which we'll get into that in the other video. But this is the play that I'm making for earnings. Now, you may be asking yourself, all right, you got earnings on the 29th. What does that mean with this contract? Well, if you've been watching the other videos, you'll notice this has time, ladies and gentlemen. I have an August 21st expiry date. And I've paid $1,600 for this, and so I'm betting that it's going to go to $2,500 before this date. Now, if Tesla does in fact assassinate their earnings report, and earnings report is basically just a backlog, a rap sheet of how the company has been doing for the past 3 months, especially during this time of a pandemic. Now, if they report and they kill it this quarter, because they have actually beat mostly every single quarter. This will be the next quarter that they would need to jump onto the S&P 500. What does that mean? You know how all the big major companies are on the S&P 500? Name one. Netflix, Facebook, all the big names. They're going to be part of that group. And if they're included in that group, the S&P is going to go ridiculously mad. But not only that, ladies and gentlemen, there's a $20 billion bet against Tesla right now that it's going to go down around that time. And what I mean by a $20 million bet, well, let's see. That is put options against the company going down. Like, there's a lot of people that believe that Tesla's not going to make it. And they've been wrong every single time. That's why, I don't know if you've seen on the news, but Elon Musk came out with those little shorts. Yeah, that's what that was for. It was for all those people that was shorting his stock, and they've paid for it. They've paid significant amount for it. But my theory is, my little crazy hat theory is, if, let's say, for example, Tesla beats. Tesla has a ridiculous earnings report, and they join the S&P 500. what's going to happen to these people that have been placing bets against Tesla? They're going to be forced to jump into the stock because they have to cover this. When you're covering a put, you're basically you're selling insurance. You're selling an option for the fact you're trying to basically get money off of the stock at this particular price, which that's not going to happen for these people because, as you can see, it's already surpassed this. Today alone, it's already hit this mark. Like, that's insane. It came down a lot today because of the fact that it's a whole bunch of mixed emotions. There was news today about China retaliating against us, but we didn't know as to what it entailed. And there was a whole bunch of different news that everybody was in there rotating out of. But I think it was just panic selling, and I think a lot of people were trying to take profits. However, I'm not one of those people. Well, I technically took profits a little bit earlier on Friday, but that's a different story for another play for Tesla. But regardless, I'm holding that bad boy until August, around probably the beginning. Might sell it before then, but we shall see. The next one we have Twilio. Twilio now is a learning company. It's an online company that deals with software. And as you can see, I paid a little bit too much for this. I kind of got carried away, just a little bit. But I bought something with time. And I believe that the $300 strike price that I got is ideal. Only because of the fact that Twilio has really been on a run lately, especially during the pandemic season or during this time. And it's something it's a necessity. It's an online company that basically deals with education. So if our kids are not going to school, this is more than likely where they're going to get the information from. They provide like online school books. They provide digital resources, different things that basically help different kids in different gradings, different grades. And before, I used to actually play this before, and I'm going to do it again. And actually, it did well for me. And as you can see, they killed earnings before. I expect not something like this, but something around this range. It's definitely going to be a good beat. So and if they can get to that 300 mark, even better. If not, guess what, ladies and gentlemen? I have time. So if you have not caught on to the theme here when playing earnings, you always want to get time. I try to get at least a contract that has a month or two. I prefer two, but if I'm trying to push it, a month is fine. With Tesla, it's a different beast. That's a completely different story altogether because it's very, very volatile. But with normal companies, quote unquote, like Twilio and Square, PayPal, and all them, at least a month or two of time. So that way, just in case the stock doesn't do the move that you want it to do on that date, which Twilio is the 29th. So let's say Twilio it stays the same, or just goes to like 230, 250 or something like that, something dumb, right? At least I still have August and September to get up to this value. And as long as they have good guidance, meaning that they saying that for the rest of the year, we're good, we're going to be profitable, boom, you cannot go wrong. But again, I overpaid for this one. If you got the bread, I mean, right now it's currently at $753 and I paid $1,000 for two. Don't do that. Do not do that. I didn't anticipate for the market to drop as quickly as it did today, so that's why I got clapped on that. So yeah, there's that. So yep, that's the reason why I am playing Twilio come the 29th. And again, that $300 strike price I think is ideal. It's only $80 away, $70 really if you round up. And it's definitely doable. It's definitely doable for this company. All right, now moving on, I'm going to PayPal. Good old PayPal. As you can see, there's another trend, a little commonality that I have going on here. I'm only playing online companies. I'm only playing tech companies this season. Why? Because tech is where is the most stable to me compared to anything else. I mean, of course, you got those people that are playing the penny stocks, Hertz, airlines, all of them. That's fine. If you can find a good spot and a good position with an option play, or if you want to hold on to the shares, do you. But that's not my cup of tea. I'm playing into what makes sense, what makes logical sense, what has been keeping the world going for the past couple of months. And that these are some of the companies that have been low key. All right, so moving on. PayPal. This guy is on the 29th as well, along with Twilio. So we got a little double feature show going on here. I picked a 210 strike call for September. And the reason being is because of the fact that I see PayPal's potential. I could see PayPal hitting 200 easily. I think the high, what was their all-time high? Their 52-week high. Where does it show more? This is always tricky here. So the 52-week high was 183.99. They can surpass that easily and hit the 200s. This time, as long as they're able to continue, if they report that they continuously helping out their small businesses that are connected to them, and also providing support for consumers by creating a direct deposit avenue. And if you don't know with finances, any company that has anything with direct deposit, that's very good, because that creates a revenue for them, a source of income for them. So that'll be really, really good if they can actually report that come the 29th. And next up, my arch nemesis, the company that I cannot stand for the life of me. If you ask anybody that knows me, Apple. I cannot stand Apple. I'm not going to get into the details as to why, but if you know me for a long time, you'll see. But with everything going on with China and the whole trade war and the fact that, let's see, Apple has ran up. I think it's time to put the brakes on for Apple, in my opinion. Now, mind you, I've never played Apple like this, but I was kind of feeling it, so I decided to work with it. Let's just say, I feel as though that it might drop not that much by August 21st, to be honest with you. I just got this because it was cheap, and I got 10 of them. And because of the fact that it's not that much of a range, it's a drop, but something drastic has to happen on their earnings report. And that's that, on the 30th. They have to say, like, hey, the China trade war is kind of affecting us. So therefore, we're not going to be as profitable this coming quarter. But the news is that they're saying that they are going to be profitable and that they're keeping the same guidance as they did previously. So, but we'll see. We'll see. I'm going to be betting against them in this case because I can't, like I said, it may be a biased play, but that's my logic behind it, to be honest with you. That's really a YOLO play for me. The next up, we have Activision. Now, Activision is a very, very good company if you are into video games. And if you're a geek like me, you will know Call of Duty has been killing it for the past 3 months plus. With the continuous additions of new seasons, they're upgrading guns, they're giving flexibility to players. It's been very lucrative for them. From last quarter, we got a decent profit from Activision last quarter, but I feel as though that this quarter is going to definitely rocket them into the hundreds, in my opinion. But I could be wrong. I mean, even still, we have this play until 2021. So even if they don't hit the $100 mark, regardless, we have another earnings quarter for them to hit that mark. And again, we still have time. Like, that's the key thing, ladies and gentlemen. Time is everything when it comes to earnings. When it comes to any type of play, to be honest with you. All right, let's move on here. We got the next one is Disney. Good old Disney. I haven't played Disney since they released Disney Plus. And since then, they haven't really been moving, but up until recently. I mean, with the announcement of them opening up Disney World, I know a few of you have actually are pass holders as well. I feel for you. I was kind of wrong morally for them to not be as organized when it comes to the pass holders. But as a shareholder or somebody that's actually trying to make money off the stock, it's definitely worth it to play into earnings. Reason being, Disney is in the process of making a shift. They're trying to adjust, for their lack of their park being open. So the only way to stem that is to limit your open availability, or limit your capacity at the actual place, and then also switch it up. Get Disney Plus, add more content. Hamilton was released on Disney Plus, what is it, like a week ago? And it killed. It allowed people it gave people a reason, rather, to actually subscribe to Disney Plus. And as long as they retain those subscribers, the revenue is just going to continuously increase for them. And if they're able to drop more content without having to spend more to make more content, then you got a winner. You're looking at a Disney Netflix, basically. That's exactly what Netflix does. The only difference is that Disney has been around for God knows how long, and only that, Disney still has the park. So they just need to just reallocate their funds, and they'll be gooch. And that's it. You feel me? So moving on, this one is on August 5th. The plays that I got a few, actually. I got 20 of them because that's how strongly I believe in this play. So 175 call. It's on October 16th. I doubt it's going to hit 175, to be honest with you. But I doubt that it was going to hit 150 back then when Disney Plus launched and they had announced all those subscribers. So this is the reason why I got time. The reason why I got October 16th as opposed to something closer. And this is going to be on August 5th when they report. So that's an extra month of time. All right, next one we have is Square. One of my personal faves next to Tesla. So Square, if you're unfamiliar with them, they own Cash App. So if you've been using Cash App for the past, who knows, you'll know that you have access to trade on there as well, buy Bitcoin, and you may even be receiving direct deposit. But most importantly, you'll be able to send money to your friends and family. So why am I playing them? And why am I playing them so hard? I am a long-term person when it comes to Square. I love the company. I love what they're about. I loved them back in 2016, but unfortunately I sold them out when they were like $30 or $40, which is the dumbest move that I could have made. But that's the past. So their fundamentals in their company is really strong. They're, as long as they report on the, what was it again, the 5th? As long as they report on the 5th that they have a steady influx of customers using the platform and they actually started to sign up people for direct deposit, you have a clear winner right next to PayPal. And that's why I'm playing both PayPal and Square, because in case one of them doesn't make it, the other one will compensate, because one of them has to hit. Both of them cannot fall. That's impossible for two cash services to fall like that. I've seen it happen before. So, next one. Actually, yeah, let me explain my pick here, because this one guys might also be able to get into. So I spent a little bit much on this. Again, the market came down. Spent $600. It's currently worth $5. So, and this is a $150 call. Square can easily hit this. It's only a $30 move, and we're talking with plenty of time. So we are golden if this hits, even if it comes close to it come that time. All right. And second to last, Chewy. Now, I haven't made any moves on Chewy as of yet. However, I do want to make a move. The only reason why I have not made a move right now is because it's September 15th. That's a lot of time. If I'm making a move too soon, I'm going to be losing the value of the contract. I don't know if you've heard of theta decay, but that's basically when you lose value on the contract with time. So let's say, for example, I get a contract to play into earnings on, let's see, I'll get October, which is probably going to be the one I'm going to be picking, to be honest with you. But rather that, let's pick one for August 28th, because you notice September is not there. Some companies, or rather the market makers, decide to block out a particular date if they feel as though that it's something that they want to finagle. Like, for example, this is August 28th. That's a little bit close to September. So because of that fact, that's the reason why they just bumped it up to October. So it's like almost every 30 days or so, or every 2 weeks, depending on what they allocate. It's a lot more complicated than that, but it's really not necessary. It's irrelevant, to be honest with you. Anyway, moving forward, I'm looking at a $65 call for Chewy. Now, if we play it into, we don't want August. We want to go after earnings, which will be $214 a contract, which isn't bad. And the reason being is because I had this contract before. I actually had one that was like $55, I believe. So it's only a $10 difference, but the company has been strong. Last earnings, they reported positive ratings, and I feel as though that's going to happen again. Why? Pandemic, people. Pandemic. We are still in a pandemic right now. People are relying on online sources slowly more and more and more, and Chewy is one of them. They provide pet services and stuff like treats, like different things that you need for your pets. Anything that you need for your pet, Chewy got it online. And you can order it directly to your crib. Sometimes it's cheap, sometimes it's decent, sometimes it's not. It's up to you to decide if you got pets. But it's a good company. I believe that the pandemic's actually thrown them into a good place to be, to receive an influx of clients. And so that's the reason why I'm considering on playing them. But I have to wait until, I would say, like mid-August, then I'll come back to it. because right now it's really not worth it unless something they report, like they say they come out with a new warehouse or something too, because they have a lot more customers that they need to cater to. Some news like that, unless something like that were to happen, that's the only thing that's going to be driving the stock higher. All right, and lastly, as a bonus, I may be considering of getting some more solo. I might play a solo play for Electronica Mechanicat vehicles. I love this company, but you guys might know I literally really like this company. It's a Canadian company for electronic vehicles. I'm going to actually have a video out on this, on why this company is so good. But this is another one of those penny stocks that turned into a really good company. But their option chain is really not that great, to be honest with you. So that's why I was like, I might play them for earnings. I don't know. It depends, but we'll see. But right now, it's actually dirt cheap. And I feel as though that this company can actually hit the they've hit the $5 mark before. So I may actually be considering getting a few calls on the August 21st side, or even buying an extra month of time and getting one for 40. No, that's 750. Was it 78 cents? Not that bad. So that's $78 to go to 5. So that's something to consider. And again, time. As long as you get time, you're good. And then work within your budget. All right, ladies and gentlemen, but that is essentially it. And that is how you play earnings. That is how I am playing earnings. That is how I am watching these companies. And I hope you learned something from that, ladies and gentlemen. If you have any questions or concerns, feel free to drop a comment down below. But as always, peace and love. I'm out.